What's going on, guys? Mike, aka Crypto Jewels. I'm going to go over Trias. All right, so this video could get long. Hang in there. I'm going to go over the bull scenario and the bear scenario. Also, guys, I'm excited to announce that I've just launched a private Discord group. I'm going to put a link below. So if you guys are interested in that, I'm offering 2 free weeks for a no-risk free trial. If you guys want to check it out, you guys can see what the content's about and what all's in there. Guys, I'm not a financial advisor. I do this for entertainment and educational purposes only. All right, let's look at Trias. So I'm going to start with the bear scenario, meaning more downside. I'm not talking about bear as in a multi-year bear market. I'm just talking about more downside. So I'm using that term loosely. So we'll start there and then we'll move into the bull side. So from a more downside potential, from a macro view, I'll zoom out. I'm seeing this entire structure, this corrective structure here that we've had as an ABC, this being a 1, 2, 3, 4, 5 for a 1 wave up in the direction of the 5 wave macro trend. So you've got a 1, 2, 3, 4, 5, and then you have an ABC creating an A, and then an A, B, C creating your B, and then a 5 wave structure down. That is how I'm seeing this bear scenario, if you want to call it that, which is still ultimately macro bullish. But anyways, we'll get into that here in a little bit. So from a detailed perspective, here's how I've got this chart labeled. I've got a 1, an A, B, C, 2, this orange 1, 2, 3, 4, 5. Is basically your 5 wave structure to finish your C. So we've got a 1, 2, 3, and then we are currently still in a WXY, or we have just finished a WXY, I guess I should say, corrective structure, which was a 4 wave, which has been very painful, which is indicative and typical of 4 waves, very frustrating, very choppy. So a lot of those things line up to being a 4 wave from a confluence standpoint. So that's the way I'm viewing it as of right now from a bear standpoint, and that would basically take us to finishing our 4 here, and then a 1, 2, and then a 3, 4, 5 down, taking us anywhere from 575 to 650, which should finish our C wave. That would be the downside potential that I see. This scenario gets invalid. Well, it's not technically invalid once it breaches this level at 1176. It's technically invalid up here at 1435, but if we can regain this level here at 1176, I would probably tend to think that we are in the bullish scenario, but we'll see what happens. And also, if you guys have been watching these videos, this 1050 zone has been a very, very, very important support and resistance zone level that we have not been able to conquer and flip as support yet. We have been basically chopping around it, now for several weeks, basically since, let's see, when we dumped down through it back in early December 3rd. So we've breached above it when we're unable to reclaim it, spiked above it, reclaimed it here for a little bit, and then failed. So as of right now, we still have not been able to conquer that 1050 level and flip it into support. So that obviously needs to happen as well, but that's the view from a more downside potential. Now let's look at the bull side. So I've got this chart. Guys, honestly, I hate looking at 30-minute charts in altcoins. I really can't stand doing it, but in this scenario, you got to understand where you're at. So I dig down into the details, which this is the 30-minute chart. And basically here, we'll zoom out and look at it from a macro standpoint real quick. This gets real cluttery over here because it's on a 15-minute chart. Let me switch that back to log so it's easier to see. But basically from a bullish macro standpoint, if this is indeed bullish and the correction is finished, I believe that this is a one wave here, which just like it was over here on the bear scenario, it's still a one wave regardless of bull or bear. And then this is an ABC and a finished correction with your two wave here. Just a simple ABC. This way I have this from a bull standpoint, and this being a 1, 2, 1, 2. So meaning 1, 2, 3, 4, 5, you got your 1 ABC, you got your 2, and then another 5 wave up to create your 1 ABC, which this will then be a 5 wave structure of this 1, 2, 3, 4, 5 wave structure. So this 5 wave structure will complete this 5 wave structure, which is indicative of an extended wave, which would happen to be an extended third wave, because this yellow count is of your higher degree. So this would be a 1, 2, 3, 4, 5, where this blue count will be a 1, 2, 3, 4, 5 of your macro 3 wave, or your micro 3 of your macro 3. So that's a 1, 2, 1, 2 setup, which is extremely good from a bull standpoint if that is the case, because that means we'll have an extension on our third wave. So if that's the case, I have this correction being just this is actually a WXY here. I've got it labeled as ABC, but it's actually WXY. And then a 1, 2, 3, 4, 5 to create your 1. And then this is a WXYXZ, which is a 333 complex correction. If that is the case, basically you've got an ABC creating your W, and then an ABC creating your X, ABC creating your Y, ABC creating your X, and then an ABC to create your Z, which would finish your 2 wave. So if that's the case, then we need to start a impulsive trend. So if this is indeed 1, 2, 3, 4, 5, your impulsive trend, this is where I'm going to get down into the details here of this chart on the 30-minute. You've got a 1, 2, 3, 4, 5, and then the way I'm viewing this as a ABC to create your W, ABC, X, and then an ABC down to create your Y. I could make a case for this, certainly. This would basically be a regular flat structure is what this would be. It just happens to be in a complex form. So this is a WXY. And in order for this to stay validated, we have got to hold that 875 level. We cannot breach this low here in order for this structure to be a 1, 2. And in order for the rest of this structure to be validated. Well, actually, I take that back. This entire bull scenario is not invalidated until we breach this low here at 766. But if we lose this, then I would be certainly worried, and I would assume that something else is going on, and this count would be basically invalidated, and I'd have to relook at it to come up with another scenario. So let's say that this is indeed the count. Let's see where this thing can go. I'm going to do this real time while I've got you guys here. So let's dive into the potential possibilities, and I will also teach you how I use entry, how I figure out entries and exits. So you got your trend-based fib extension tool. You start it from the beginning, the origin of 1, which this is a 1, 2, 3, 4, 5. So this is a 5-wave structure, which would be a 1 wave, up to the top of 5, and then down to the bottom of 2. So that would create your 1, 2, and would give you targets for your next move. So this would be a 1, 2. Your 3 would be at 1, 6, 1, 8. Your 4 and your 5. So your 3 would actually be at about 1130. And then to find where your 4 wave would go, you take from the bottom of 2 up to the top of 3. And at minimum, you're going to retrace 382, which would put you basically retesting that 1050 zone that we talked about earlier. So I like that from a confluence standpoint. And to find your 5, use the fib retracement tool. The reverse retracement 1618 is how I like to conservatively 5 by 5 targets, and then throw that up at the 1618, which would be $12.02 roughly, which would create a 1 wave, again, a micro 1 wave. So this would be a 1 wave of this 5 wave structure. So you've already got a 1. Now you've got a 1, 2, 3, 4, 5. And then you've got a 1, 2, 3, 4, 5, which would, let's just extrapolate this out. So you take from the origin of 1. Well, you got to find where this thing's going to correct you first. My apologies. So you target 618s for your 2 waves, which happens to be right down there at 990. And then you do the same thing with your retracement. So you start at the origin of 1, go to the top of to the top of 1, and then down to where you believe 2 is going to retrace to. And now that gives you your targets, which we've already got mapped out, actually, somehow, some way, which is actually lining up perfect. So it looks like we've actually already done that. So I must have done that in a different video. So you've got your 1, 2, 3, 4, 5. So this would be your 1, 2, 3. Your 3 wave here would go up to about 1650. Actually, no, that's off. My apologies. You got your 1, 2. So last time I did this, it looks like this is actually going to all move up. So that's your 3 wave of this structure here. This is going to get a little cluttered, guys, so bear with me. Let's change the color of that to a green, and let's change it to a sub micro count. So what you actually have is your 3 actually now comes to here. Your 5. So so that green 3 will go there. Let's get all this other stuff off. All right, so where your 4 will retrace to would be about there at 382, which is 1426. And your 5, which happens to be your 3 of your larger degree trend, would now be here. So, okay, so now what you've got is you've got a 1, 2, 3, 4, 5. So your micro 3 of this, or your sub micro 3 of this micro 3 wave would actually be at 1731. Your 3 wave of this micro count would be 1995. And then let's find where your 5 wave would, I'm sorry, your 4 wave would likely retrace down to here. which is a 50% retracement level. And then you would have your 5 wave. This is getting kind of messy, guys, but this is how I do it. This is real world, how I come up with my targets, entries, exits. So, all right, so that's where that takes you to. So my revised count from a bull scenario happens to be this one, which this is an entire one structure of your next leg up. So this would take you to $25. So if this count is indeed correct, your next leg up is $25, and then we would pretty much reevaluate from there. So hopefully I didn't lose you guys. I know I got into the weeds there and got real detailed, but if you guys like that stuff and you want to learn more of how I do it, then join my Discord because that's the type of stuff I will be teaching. So see you guys later. Hope you all enjoyed.